Hi, this is Barry Haimo. Thanks for tuning in for another dose of bite-sized bits of knowledge where we give you meaningful information in a short amount of time. Today we're talking about allocations of profits, allocations of cash. Your business is going well, we're accumulating cash in the bank. What are we going to do with it? Are we going to invest it in the business, employees, contractors, product, innovation, marketing, whatever? Or are we going to give some back to the shareholders? In a corporation, you do it as a dividend, and it's pro rata. There's nothing to talk about in terms of reallocations. You have no flexibility. That's C or S, doesn't matter. In a partnership, you have flexibility. It's pretty cool. You can actually say, I want the investor who's 25% to get 75% of the distributions of cash for a certain amount of time, forever, until their investment is paid back, plus a preferred return. It's all negotiable. And what happens is that this 25% investor partner can actually get 75% of the profit distributions, as long as on paper and in reality they are the same thing. It's called substantial economic effect. The IRS will honor that as long as both of those things are in harmony. You can't just say it and not do it. That's not going to work. So investors sometimes like that flexibility. Sometimes investors want a C Corp because there's no pass-through taxes. The difference is that in a C Corp, they put their investment in and they wait. They get dividends maybe, but they'll wait. There's no tax issues every year. In a pass-through, the investor and the partners are going to get, again, the 1065, reporting the profits and losses, all the shareholders, all their interests, and each shareholder gets a K1. That K1 is attached to the 1040 of the partner, and that partner has gains or losses to report the IRS, and the IRS expects taxes to be paid on the income share of the partnership, whether or not the partner actually gets the money. You're taxed on the income, your share of the income, whether you get the money or not, whether it's in the company's bank account still or it's in your pocket, you're still going to pay taxes on it. That's why partnership tax is like the worst, most difficult, complex class I ever took. And so that being the case, distributions of cash, you'll find a minimum requirement to pay the taxes that will derive from the income to each partner. It's called a minimum tax distribution provision. You might not find it in the statute. It could be another big hole, but you'll find it in good operating agreements, because obviously you don't want to have to start paying taxes on income you're never seeing. So there's a difference between the pass-through and non-pass-through. Investors get that flexibility of reallocating. We can reallocate a 25% shareholder to be a 75% distribution receiver until a certain amount of time, forever, until their preferred return is paid in full, whatever. It doesn't matter, as long as it's mirroring the deal. I think it's worth mentioning that the partnership distributions, there are rules. The statute has rules, the partnership agreement will have rules. You can't just pay out distributions if it's going to make you insolvent or you're going to, not be able to have a certain amount of assets over liabilities. You need to be careful. So what we're talking about now is on the assumption that there's enough cash to pay the partners, and how it's going to be done. You can reallocate, or you can leave it as pro rata. You have the flexibility. It enables you as a partner looking to raise capital to make deals. You can give investors attractive terms. You just can't do that kind of stuff in a C Corp or an S Corp. So it's worth mentioning LLCs, partnerships, limited partnerships, and all the variations of limited partnerships this would apply to. So it's really important to know this kind of stuff. I hope you found it helpful. And don't forget to download our free business planning stress test. The link is below in the description. The next video we're going to talk about is transferring interests and all the things that go into that. So thanks for tuning in, and stay tuned for more.